there. You can see this guy at the same time here. You can see this guy here. There's a lot of POCs exposed in these areas. You see that? You know, the only POCs down at the bottom edge here, you know, that's the only one that kind of turned the price around easily, but looks scalpable. Took a short pop at it, made some easy money. I mean, that's a living for a lot of people, isn't it? That. Do you agree with that? I mean, you don't have to hold swing trades for like life and you know, try and get yourself into these massive opportunities. All you have to do is try and get a quick scalp trade and make yourself a couple of $100 on a two lot. And if you can do that 4 or 5 times a day, you're making $1,000 a day on a two lot. Well, that's $250,000 a year career in trading, guys, right there. And you only have to find these types of wee setups, you know, every now and then. Okay, that's a good one. Like it. Quick scalp, money's in the bank account. And if it goes back against you, you can always just bag and tag some of that monies. And sometimes they do absolutely break. Sometimes you get a nice breaker coming in and, you know, getting that relative value storyline squared away as well obviously leads to a better decision. And we're in a good place here. I mean, I'm not mega bearish, but I'm not mega bullish either. I think we're in a relatively good place here to get that working. You look at it from the NASDAQ YM line that we talked about a few weeks ago. And we've got a fair degree of opportunity here, haven't we? Take that one off for a second. You'll see that slope on this one is quite significant sell side, isn't it? It's been quite significant on the sell side up to this point. And, you know, but it's been difficult to find real value against the green line, which is something that we do want. So the real value started to creep in here for a sell. We got it scratched out again. The real values are kind of a little bit against us here, which is why it's made life a little bit difficult. So we used the order flow to help us on that one. And we've managed to get, as I said, a quick scalp out of that. But I don't really like the story because of how bullish this short-term pop here is. And for that reason, it is a scalp trade, which is what I clearly stated before we got started here. It is a nice, easy money scalp to make some quick cash on these. But the idea of looking at this is the idea that if this is above our neutral rate here, there's our neutral rate line right there. You see it? If this is above, if we're going to sell it, we need to demand a higher price. So it's neutral bullish, not neutral bearish, not neutral. It's neutral bullish. And therefore, if the value is sell side, we need to keep demanding that higher price. We need to keep insisting that we get those good prices on our books to try and tie in with the rest of the story. Otherwise, we'll end up overpaying for a short sell that's still got a bullish buyer somewhere in the narrative. So we've got to be careful with it. We can't just jump in any price and hope for the best, even if the smart money says that we might be able to, which at the moment there's a lot of buyers in this. So you know, selling at lower prices even would make a wee bit of sense in terms of the NASDAQ just now. And I've actually just taken a BSG squeeze on that there to try and get into the. I saw the smart money coming back in again, and we got a nice hold below those POCs at 58. So I thought, you know what, I'm going to go short off that 57.5. We've just traded 52.5 and made some nice money on it. Stops at break even on that one. And another profitable trade. Sorry, we're obviously looking at the S&P here, but I'm looking at the NASDAQ for that BSG squeeze. And put it on trading view just so that we could show you what we were doing, how a BSG squeeze looks, feels, etc. And it's pretty relatively easy, that one, wasn't it? I'll show you what we did for the BSG squeeze on NinjaTrader. So there's the trade there. It is still a scalp, as you know. I don't like the value. The value says I should not take this trade, just for completeness. I should not take this trade. But you can see in here, Good solid sell side smart money. So lots of buyers getting trapped. So we know where the buyer's getting trapped, don't we? If the smart money is sell side, we know exactly where the buyer's getting trapped, right? Because there's the POCs of the buyers getting trapped, right? There's the POC, that's the volume area that the buyers are getting trapped into. So if that's where the buyers are getting trapped in terms of volume, we know that their stops are going to rest just below that price, aren't they? So if I can get into the BSG squeeze to take those stops out, I should make some quick, easy scalp money. And if I can make some quick, easy scalp money, there it is there. That's exactly kind of what we did there on the NASDAQ, isn't it? Made some quick, easy scalp money using a BSG squeeze. Great trade, nice outcome, and we've still got some sell side. Remember, you might be looking at it wondering, yeah, but you know, but we do have some real reasonable sell side value working on this, don't we? It's not like it's a, you know, that value is really quite bearish. I mean, it's, you can see the BSG squeeze was running back into that green line dropping. I like it. I'd still prefer to sell at higher prices, absolutely. But when the order flow tells me that I've got to play, I've got to play. I mean, the order flow gives me that short term, you know, 1 minute look, for example. So we took it on that candle there, and we got our BSG squeeze, took it on that candle there, got the BSG squeeze, made our money. And I'm aware that because of what's happening here, there's still going to be a possible buyer resting below here, which, you know, I just pay attention to. Plus, obviously on the NASDAQ, of course, we still challenged because we've got that 850 wholesale, which if we can't take 850 wholesale offered, then we know that that's going to provide us with some dealer buying coming in, and that's the 850 that we've got at the bottom edge. Now, we were able to take 850 out. What happened when we took out 850? What happened to this trade when we took out 850? POC got trapped below there, and the price went back above. So therefore, we simply closed out the squeeze, and we made ourselves a 5-point profit, or $100 per contract. 2 contracts, we made $200. So we move on to the next opportunity, right? So just remember that we do have a dealer's key there at 850 on the Qs, and we just acknowledge that that's going to be a bit of a challenge to take on the other side of the book here. It's got the same kind of rubbishy look about it as yesterday's market has, doesn't it? Royal's boring us to death here, Paul. My God, is it paint dry or what kind of springs to mind? Absolute rubbish. Still buy side. We have gone 75 bid. We talked about this trade at 50. So we're up 25 ticks. I mean, it's not a bad bit of business, but my God, it's boring. And somebody in the retail space will say, boring's good. Yeah, sometimes it is. If you're on a salary, it's not so good if you're on a profit share, is it? But 75 traded, 66 target price. Is it ever going to happen? Swap dealer's still bullish. We're above VWAP, so. But my God, I mean, we're going to need 2 o'clock. Cannot come fast enough today in this oil, can it? It's hardly algorithmic. Would you agree with that? When we look at it from the 1 minute, 5 minute charts, we can still see that idea of what algorithmic candles should look like. And this does not look like an algorithmic buy response here, does it? It doesn't look like any kind of buy response, to be perfectly honest. But it's still going up. It's rubbish, but it's going up. And that's what we said about bonds. It's probably going to keep the bond on the back foot here. And, you know, obviously bonds, if it goes up, we should still be able to make money selling top edge bonds, of course, trying to get that short sell. Now, we've just traded 01s on bonds. I've taken a quick swing at some bonds there, just into that bond 01, and making some monies on it. I say, really? Yeah, because the short term wasn't good, but the macro is good, right? I've got divergence on the macro. At 2s10s, I would like to have preferred to see a divergence on the 2s10s. I never got that. I'm just going to take a wee bit of money here since I got 0-1 on this trade. This is obviously the ZB contract I'm talking about, guys. So so this is the bond as it stands at the moment, and you can see that we've got that oil pop, of course, and that means that we should be selling some top edge supply narratives in terms of bonds, shouldn't we? We should be trying to work sell side bonds. At the same time as that's happening, we can already recognise that the curve kind of gave us a story here that could have been negative, but it was actually slightly divergent there. So if I'm looking at that small, reasonably sized divergence, that would suggest the bond should be probably trading at 7s and 8s here. Probably trading 7s and 8s. Okay, so you might say, well, with inflation popping and bonds should be trading 7s and 8s based on the curve, it would be reasonable to think that this trade makes just that little bit of sense, right? It's reasonable to think that this trade might just work. Now, the Japanese yen is still a bit of a pain in the rump. Japanese yen is still quite buy-side poppy, which means that we don't have a particular yen hedge against this. And if we had, we could have sold a lot more into this play at this point, but the Japanese yen's been a little bit problematic from that front. So it's been a lot more careful. Because we're a lot more careful, it means we're always demanding that higher price. And that's exactly what we got. We got the higher price. It popped through the 16s. It popped through the zeros on the ZB contract. We got 0.102 traded. We sold the ones. It's currently trading at 30. We've made 3 ticks on it on the ZB contract. I'm happy with that. And I've got a nice easy stop at break even should this not evolve the way we would like it to evolve. But look at that black inflation line. These curves should be steepening behind that, shouldn't they? The curve should be steepening behind that storyline. And if it does, this bond is going to sell off beautifully. But a lot of that depends upon what happens here. If the oil starts selling off, the bonds are going to stop dropping, and that'll be the end of the narrative, right? That'll be the end of that particular high probability play. And obviously the bonds have started to sell off. In fact, I've got my change taking place to go bearish, interestingly enough, on oil. Now that's interesting, isn't it? So here's what's happened. See how we've gone bearish now on this? So it's now bearish neutral. So bearish neutral, I'll be looking now at the possibility of working sell side into the cash open. 20 minutes away, so sell side into the cash open with a possibility of a capper coming in at 50, running 75 stops and looking for that 75 buyer to sell into, perhaps up to the 66. Comprende? Comprende. Like, love. So would you torture that, marry it, or kiss it? What would you do, guys? I'd torture the bids. I would probably kiss the top line, and I'd marry the short sell. Agreed?